What's up, guys? I hope you're doing well. So kind of branching out a little bit and starting to look more into what's going on across the pond over in the EU. In this case, specifically with the press conference that the European Central Bank had earlier this week. So I guess earlier last week. Um, it was on the 14th, I believe. But let's go straight into the screen share and give it a look. Okay. Yeah, last week, the 14th. And so basically, a lot of it's just like, hey, we're still dealing with pandemic stuff. Um, and then most obviously, like the war in Ukraine right now and how that's affecting them. Really wasn't that long of a press conference. Well, I guess whatever their I think it's called the statement first, where they do the statement and then all the questions and stuff. I'm basically just going to go over the statement because one, the questions are a lot longer. um, and also just all of that's also on like TV and stuff. Pretty sure you can rewatch it somewhere. But basically, let's go back up. Okay, so the euro era economy grew by 0.3% in the final quarter of 2021. It is estimated that growth remained weak during the first quarter of 2022, largely owing to pandemic-related restrictions. Okay, the war in Ukraine, is already weighing on the confidence of businesses and consumers, including through the uncertainty it brings, with energy and commodity prices rising sharply. Households are facing a higher cost of living, and firms are confronted with higher production costs. And this is we've talked about it quite a few times on this channel. I'm sure it's pretty much everywhere. To be honest, I don't watch the mainstream news. I just have a lot of other things to do. Like work and such. But anyways, the EU's been going through basically an energy crisis for a little bit. I don't want to say quite some time because when you're talking about stuff from like an economic standpoint, quite some time is somewhat relative, right? And so it might seem like quite some time right now is like a couple months, few months or so. Whereas in other times it can mean whole decades, depending on what you're talking about. Um, But one of the things that's interesting to note is their inflation rate was 7.5% for March. So it's lower than the United States, but it's still up there. Similar, I'd say it's similar to the United States. Um, it was apparently in February. I think ours was just revised to something with an 8 handle. I believe it was 8 point something. I don't remember if it was 8 even or like 8.5, to be honest. Um, But and that's for March month over month, I'm assuming. And then you also have to keep in mind, like here's the energy prices were driven higher after the outbreak of the war and now stand at 45% above their level 1 year ago. Um, okay, so I don't know the intricacies of how the European Union measures like their version of the CPI or how it's different from the United States because I know it's very much it's a country by country basis, obviously, because the country does their own data. And then I know from my studies of the Federal Reserve that they changed the how they define the CPI on a. I wouldn't necessarily say frequent basis, but it's not like it's the same CPI that we had since the 70s, because it's not. It's changed a lot. Um, Anyways, to continue, food prices have also increased sharply. This is due to elevated transportation and production costs, notably the higher price of fertilizers, which are in part related to the war in Ukraine. In part. um, excuse me. So, if I remember, I don't remember if like Ukraine is the largest like grain producer in the world. I know they're up there, but my biggest thing, and I did do a video on this one, is basically with I think it was phosphate or maybe one of its derivatives that's involved in fertilizer. Anyway, it's necessary. You have to have phosphate for fertilizer. Period. Um, and so there's the largest company. and I forget the name, and I think it's in Morocco, if I remember correctly. But they get like something like 80% of their ammonia from Russia. So it's kind of necessary. You need, and same with natural gas. Um, you just need it, and that's what happens when stuff like this happens. I guess it's quite unfortunate, but that's it's even like sanctions too. Like, what are you gonna do? Um, the labor market continues to improve, with unemployment having fallen to a historical low of 6.8% in February. Um, so I don't know what the United States is off the top of my head, but 6.8 for the United States seems like it would be higher than what it normally, or than whatever they call it. Whatever the term is they use for it, where it's like the lowest. Because like how you define like maximum employment is like everything besides like employment due to recessions. So like you'll have there's like seasonal unemployment due to like seasonal work, and then there's cyclical, and then I think there's another one. It's like I think it's structural. And I think it's basically no structural unemployment. I think is which one they talk about. I don't remember which one they named off the top of my head, but it's been a minute since I looked at those. But still, their unemployment rate's down, so the labor market is at least doing better than it was before. And then, kind of another major point that I wanted to make with this was the risk assessment. So it says the downside risks to the growth outlook have increased substantially as a result of the war in Ukraine, while risks relating to the pandemic have declined. Uh, the war may have the war may have an even stronger effect on economic sentiment and could further worsen supply side constraints. Persistently high energy costs, together with loss of confidence, could drag down demand and restrain consumption and investment more than expected. The upside risks surrounding the inflation outlook have also intensified, especially in near term. So basically, both. With one thing to note, especially that I've noticed with pretty much anything macro or like macro factors. You could think of it as like inflation and versus deflation is a great way to think about it, is guess is the easiest to understand example, but it's other things too. It's like there's so many different things, like there's so many different cross currents acting on them at the same time. Because what you're really measuring with the whole inflation thing is like the value of the currency, right? And with respect to whatever you're measuring it to. So whether it's asset prices, or if it's like in the case of the CPI when it's consumer goods, um, the biggest question you need to answer with economics is compared to what, right? And so, um, with all these factors at play, it's more of like they're like tectonic plates, like pushing and pulling together and trying to basically, almost like a tug of war too, to whichever side happens to be winning, whichever forces are stronger and whichever has more on it, whatever side's creating the most force, that's the way you're going to see things go. So when you have more inflationary forces at play that affect the economy to a greater extent, you're going to see more inflation. Um, and see the basically like in the case of consumer prices, them go up. But one thing to note is like consumer prices and asset prices aren't necessarily correlated, right? And so basically, I think the 70s is a great example of this, to where you had serious bouts of inflation, known as like the Great Stagflation and everything else, going through like I think 1980 or 81. Um, I think was when it ended. But basically, you had that, and then you also saw like a 50% correction in nominal terms in like the stock market, which is kind of what most people look at purely for asset prices, um, which isn't necessarily true, but it's still something you need to keep in mind. Um, but yeah, So I guess continuing with financial and monetary conditions. So at the same time, so far there have been no severe strains on money markets nor liquidity shortages in the area banking system. Um, Again, I'm not as well acquainted with the situations for the Eurozone. Um, that's kind of the point of this video, is to start looking into it as well. Um, but I know one of the persons that I look to a lot is Jeff Snyder and Emil Kalinowski, and they're Eurodollar University. They're really good with international banking and talking, especially money markets and liquidity in general. Um, they do a really good job, and it makes a lot of sense, at least to me. Um, so yeah, it seems like their credit standards are tightening for like housing as well. Sorry, I am not articulating that well enough. So basically, their credit standards and their lending requirements for home loans and stuff for households and firms are tightening. Um, so I think they're also seeing rises in interest rates, which would be kind of similar. I don't know if it's to the same extent as what we're seeing in the United States in terms of mortgage rates, not the Fed funds, because that's only been up 25 basis points um, from the last meeting, if I remember correctly. So yeah, and a lot of similarities between the U.S. and the Eurozone, but definitely some differences. It seems like it's particularly in magnitude, but that's it. And then your kind of classic central bank thing: the calibration of our policies will remain data dependent and reflect our evolving assessment of the outlook. And we stand ready to adjust all of our instruments within our mandate. So your typical statement. This sounds very similar to what the Fed does all the time, which is why I highlighted it. But yeah, definitely some interesting things. Might start looking more into the Eurozone just because I'm not as well acquainted with that side of, or I'm not as well acquainted with how their stuff is measured, to be honest. Because for example, with the CPI, it's like it's a consumer price index, right? But people don't, they just think like consumer prices in general, which it's not necessarily. I mean, obviously it's just consumer prices, but like the weightings change, how they define certain terms, like with housing. Oh, in the CPI, it's no longer like, housing prices. It's like homeowners equivalent rent or whatever they call it. But still, um, I think all of those little nuances are definitely important to actually learn and study, and so you can really try to understand. Especially, I think that's one of the biggest, that seems to be one of the largest difficulties with comparing multiple countries and stuff, the difference in how they measure everything. But anyways, that's what I got for this one. So I hope you guys have a good night.